Hi, welcome to the video. In this video, we're going to look at what happened in the stock market yesterday. GameStop stock, the short squeeze, Wall Street bets, Reddit, and effectively the internet versus Wall Street. Welcome back to the channel. If you're new here, please head down and subscribe to the channel for more content coming out on this type of topic, dividend investing, penny stocks, and all things the stock market really. And while you're down there, give it a little like as well, because it really helps the channel. In this video, you've probably seen it already or read about it, but I'm going to go through the very basics in layman's terms, exactly what happened yesterday with this short squeeze, what a short is and what a short squeeze is, and exactly what happened in as simple terms as I possibly can. That's all this video is going to be about. It's going to be a much shorter video than normal. I'm not going to be giving any advice in this video, or financial advice or stock tips or anything that I'm buying or selling. It's purely going to be what happened yesterday with GME, GameStop. So let's get straight into it. So let's talk about what a short sell is first. Selling a stock short. Most people will know what buying a stock is, buying a share, and then if the price goes up and you sell it for the higher price, you then profit. But what happens when you sell a stock and then you buy back at a lower price? How do you sell a stock that you don't own? So short selling is a way of betting against a company. You bet against a company's value, and you think the company is going to go down in value, not do very well. Something like, let's give an example, maybe years and years ago when Blockbuster was going out of business, you might have bet on the business model not being up to date with Netflix coming out and things like that, and the company was not going to do very well over the next mid to long term. You would sell the stock short. You would sell the stock at the higher price and buy the stock at the lower price, thus gaining that much profit, the difference. The easiest and simplest way of explaining this, and I heard this once and it kind of stuck with me. Let's use a game as an example, as that's quite relevant to GameStop, I guess. In the most simple terms possible, you would borrow a game off of a friend. You would sell that game for £20 or dollars, whatever you currency use. You would sell that game for $20 and you'd get your $20. That game would then go down in price and it would go down to $10. You'd then buy that game back for the $10 and then you'd give it back. So you're effectively borrowing stock from your broker, banking on the price going down, selling it at the higher level, and then buying it back, covering yourself at the lower level back to your broker, and then you gain the difference. Opposite way of buying a stock, so effectively you'll buy a stock from the broker, you own that, you own a part of the company as we all know, and then you'd sell it at the higher end. There are of course more fees with short selling as well as it costs to borrow the security. That's the simplest way of kind of putting it, I guess, and hope that kind of makes some sort of sense. Now, in the last number of years, there's been a huge surgence of retail traders. A retail trader is someone like myself. I will sit at home and I'll go on the computer and I will be able to buy securities, trade currencies, buy bonds, just from the comfort of my own home. I'm not a company, I'm not an institution, I am not Wall Street. I'm a retail trader and a retail investor. Now, with the apps like Robinhood, Trading 212, Webull, there's been a huge surgence, especially with commission-free platforms of retail traders wanting to make a quick profit, getting into the markets themselves at home. It's so simple to do. My phone's there. You can do it on your phone when you're out and about. And this has caused real problems for institutions, hedge funds, and Wall Street in itself, because there's a collection of people that are starting to fight back. Websites like Reddit and Wall Street Bets are prime culprits, where what they're now doing is fighting back and they're actually profiting from Wall Street short selling a security. And that's exactly what happened with GameStop. So the big institutions, the big hedge fund companies were short selling GameStop, assuming that the value of the stock was going to go down and the company was not going to do very well and go out of business. And what then happened is retail traders all got together on Reddit and Wall Street Bets, and they all got into the market at the same time and bought GameStop stock. That's not easy to say. In buying this stock, it forced the price up. So I'll go on to now exactly what a short squeeze is. So all these hedge funds and companies have shorted GameStop. All these retail traders have got together and they have started to buy the stock. This forces the price of the stock up. these institutions and hedge funds are now panicking because they've predicted that the price is going to go down, and it's not, it's going up. What they're needing to then do to cover their position is buy back the stock at a higher price, at a loss, but to cover their position. And what that's then doing is forcing the price higher again because there's more buying, and it's forcing more institutions and hedge funds to have us cover more of their position, to buy again and keep buying again and keep buying again. Now, as that happens, the more people buy, the more the price goes up, and you'll see what has happened to the stock price. So that's a short squeeze. So effectively the retail traders are squeezing these hedge funds and their short position, forcing the price up and squeezing them out of their position, having to buy back and cover at a loss. Short sellers and hedge funds on GameStop lost a combined just over $5 billion on this short squeeze. Now, this short squeeze was so dramatic this time that I went to get onto Trading 212 and IG at 2:30 in the afternoon yesterday when the US market opens, and I could not get onto the app. It had crashed, it had closed, it had ceased marketing. It wasn't working because of the volume of trading going on. It just couldn't handle it. A lot of the other investing and trading apps did the same thing. The US ones, I'm pretty sure Webull and Robinhood both went down as well, I believe. So there was a serious panic in the market yesterday as all these trading apps went down. I too was panicking. I had plans to buy into AMC at $4.96. I had an order and it gapped the order completely and went up to $20. So it quadrupled in price within a very short period of time. I couldn't get back into the app for love nor money because it was down. Very frustrating. And this is the panic that this is causing. Later in the day as well, because of the volume of transactions being made on GME stock and AMC stock, I think AMC Entertainment, I believe, a lot of the brokers would cease trading on that. They'd only allow you to sell the stock and not to purchase the stock. So they were even restricting what was happening with those particular stocks. That's how serious it's getting, and I think Parliament are now talking about it. Parliament? Have the US got Parliament, or is that a UK term? Don't know. Anyway, the big wigs that make the decisions in the world, they are now talking about potentially ceasing trading on certain stocks that have got big social media cult almost following and are being discussed about short selling or short squeezing them on social media. So that's all being discussed. I think it is probably important to do so because it's just stock manipulation at the end of the day. Is GameStop actually worth $65 or whatever it was at? I don't know, I've not looked into it, but probably not, because it's just happened through stock manipulation. So be interesting to see if it still goes as well and carries on going up, or whether that crashes back down and tumbles back down again and everyone starts short selling it again. Who knows? Serious swings, serious movement, serious volatility. Great to trade probably if you're a scalper. You've got the perfect in to just highly leverage short sells straight up, make yourself some tidy profit. And there's a lot of mutterings about other short squeezes coming up. If you're interested in looking into short squeezes more and what might be happening, there'll be lots of videos on it. Have a little look into BlackBerry, Nokia and AMC Entertainment. These have been tipped to be the next biggest short squeezes. Big hedge funds and institutions are shorting it at a rate of no and betting on the price going down and essentially forcing the price down. There'll be a rally of retail investors, I'm sure, buying into the stock to ramp the price back up, to squeeze those short sellers out of their positions. Just wanted to get that out there. Much shorter video today. I hope all that made sense. I hope you have a slight better understanding of short selling and squeezing short positions out of their positions. You may have learned a thing or two about retail investors and what they're all about and this new up and coming craze. That'll be all for this video. I hope you enjoyed watching it, and I'll see you in the next video.